All right, guys, we had a lot of companies report earnings this morning that we have to break down in this video, and I think a lot of these, most of these, if not all of these, are financial institutions. Actually, yeah, all of them except for one. So we have a lot to go over in this video. We're going to go over their earnings, revenue, EPS, all that good stuff, guidance, and of course, guys, like we always do, we're going to break down charts in this video. But before we do that, don't forget to get your free money from MooMoo, the sponsor of today's video. Up to 16 stocks, each up to $2,000. All you guys have to do is use that link down below, or just go to stocksurfest.com/MooMoo. And once you open up your account, fund it with at least $100, you get 5 stocks right off the bat. And fund your account at least $1,000, you get 10 more stocks, totaling 15 stocks. And listen to this, guys, the best part of the promo: fund your account at least $5,000 on top of those 15 stocks. You also get a free share of either Tesla stock or Expedia stock, which, guys, this promo is just insane. So use that link down below, get your free money, and of course, full disclosure, that is an affiliate link. It helps out the channel. I appreciate you guys as always. And with that being said, cheers. Let's dive right into the video. So it's currently about 9:50 to about 10 a.m. on the East Coast. So we're pretty much in the beginning of the day. The markets just opened about 30 minutes ago, and like I said, a lot of companies reported earnings, and a lot of them are moving all over the place, kind of like the markets right now. Look at this, guys. The Russell's up 0.9%. The Russell keeps on crushing it. It looks like it's about to go to 2,000 points. I don't know about you guys, but to me, that's what it looks like right now. We broke over, 1,900 points. Now we're breaking above 1,960, which we called out. That is the high, or was the high, from the middle of February. Now, the next main gap I'm looking at here is towards 2,000 points. I mean, do you guys see that? The inverse head and shoulders we outlined, I think, yesterday is also playing out here on the Russell. And as the Russell's up 0.9%, look at this, guys. The NASDAQ is down 0.5%. So we have triple Q selling off here. Let me actually just pull up triple Q to make it easier, guys. There we go. Triple Q selling off a little bit, nothing too crazy, but we are seeing a bit of a pullback here, down 0.5%. SPY is up 0.1%. Look at that, guys. So in other words, markets are all over the place today. It is just one of those days right now. And let me show you guys this. The Dow's up 0.5%. So we have the NASDAQ down 0.5%. The Dow's up 0.5%. The Russell's up 1%, as the S&P's barely up, pretty much at break even. It's just one of those days, as the VIX is down about 0.4%, and we have gold up 1%, and silver's up about 0.6%. So the first stock I want to cover in this video, guys, which, again, all these that we're covering, they reported earnings this morning, is Bank of America, ticker symbol BAC, and look at their stock, guys. It's currently up over 3.5%, and now we're starting to test a multi-month resistance, being around $30 to about $31 per share. If I zoom in a little bit, you guys can see that was the high right here. Let me show you guys really quickly. It was the high from the middle of April, also from the beginning of June, roughly about $30-31, and now we're getting there again in real time. It's at about $30.50. It's up over 3.5%, and we are above the moving averages as well. We have a golden cross, which is great. And now, are we fully breaking out here on the charts? No, but we are approaching, again, like I said, a big spot. And if we do break above, let's say 31.50, that's where we could start fully breaking out on Bank of America, which, let's be honest, guys, we're stone's throw away from that point. And we had earnings this morning that, again, is setting their stock up over 3.5%. So let me see exactly what they did. I believe they double beat. I looked at the numbers a little bit ago, guys, about 30-40 minutes ago. So it looks like here they did EPS of 88 cents, which beat the 84 cents expected, which is great. And they also beat on revenue, $25.33 billion versus $25.05 billion expected. So double beat there for Bank of America. And it looks like a lot of these different segments of their business, they're doing well. Net interest income, $14.2 billion, up 14% year over year. Pretty good. Non-interest income, $11 billion, up 8% year over year. Let's see a little bit more here. Consumer banking revenue, $10.5 billion, up 15% year over year. Global banking revenue, $6.46 billion, up 30% almost year over year. That's nuts. Global markets revenue, right around $4.9 billion. That's up 8% year over year. So they're doing pretty well in terms of, these different metrics, right? Again, they beat EPS, revenue. I'm not seeing anything here on guidance, which it'd be nice to see guidance. But it looks like here, they grew their net income by 19% in Q2 year over year. Big move there. Pretty nice. So BAC, guys, which is one of the stocks that got hit more aggressively when it comes to the bank stocks, at least over the past couple of weeks or months, rather. Really, the past couple of months, it's been flat. A lot of the sell-off came in early February heading into March. But either way, it got hit pretty aggressively. I mean, this stock in the end of 2022 was almost $40, and it got all the way down to 26. That was a 31% drop for Bank of America. That is a big drop. So now we're arguably starting to reverse. Again, we're not fully breaking out, but if we do start taking out 31, $32, that's where we could start to break out. So that's BAC, guys. Keep your eyes on it. The next one for this video is another financial institution, guys, which is doing very well right now. Their stock is, at least last I checked, guys, it is Charles Schwab. Holy crap, it's doing even better since last I checked. Oh my goodness, guys. Now it's up 13%. Holy crap. Earlier when I looked at it, it was up 7-8%. That might have been in the pre-market. But yeah, now that the market's open, it is up even more. So yeah, that was in the pre-market. It shot up from $58, and now I just got my alert on the Dow. The Dow's starting to break out. Looks like we'll talk about that maybe later if I remember. Looks like here Charles Schwab was at $59 in the pre-market, and it shot up 9% by open. Then once the markets actually opened, it ran all the way to $67, making a move of 14% off of the pre-market lows, maybe even a little bit more, which is just insane. So SCHW, Charles Schwab, let me see on the 4-hour. Yeah, they're fully breaking out, right? Fully breaking out. We have the inverse head and shoulders that we outlined, I think yesterday, or maybe that was on Sunday. Yeah, that was probably on Sunday. We outlined that. That's breaking out now. And we see the earnings that came out. Let me actually see what they are before I forget here, guys. Looks like they did adjusted EPS of 75 cents, which beat the 71 cent expected. And sales came in at $4.66 billion, which beat the $4.61 billion expected. So they beat EPS nicely, beat sales. That's awesome. And let me see. Anything on guidance? Looks like they see 2023 revenue to decline by 7-8% year over year. Clearly, though, that's priced in, or that was a known thing. I mean, the stock doesn't really give a crap. Again, it's up 12% on that news of the decline. So I'm assuming that people already knew that. They were pricing that in. So maybe the earnings were better than expected. I mean, pretty much that's kind of what I'm getting out of this. The earnings were better than expected, and the stock was already so beaten down heading into earnings. So it's kind of like a sigh of relief rally. Now, the $1 million question is this going to last? Do we run straight back to the 80s? I personally doubt it, that we run to the 80s. Sure, it could have lasted a little bit, this run, but I think we're going to get a pullback probably pretty soon here, maybe back towards the lower 60s, maybe high 50s, and that'd be a point where I would reconsider personally Charles Schwab. And mind you, I don't own it right now. I don't own Bank of America either, but I'm not looking to chase this one right now. If anything, I'm more inclined to look at Bank of America on that breakout because it could see a move similar to what we're seeing now with Charles Schwab, at least in my opinion. What do you guys think? Let me know your thoughts down below in the comments, and hit that like button while you're at it, guys. I really appreciate all of you for tuning in as always, and make sure to subscribe. We're almost at 30,000 subs, and that's the goal by the end of this month. Maybe we can do it. I don't know. Make sure to subscribe. It's free, guys, completely free of charge, and I appreciate you all again, as always, for tuning in. So the next stock is Morgan Stanley, ticker symbol MS, and guess what? This one is also up over 5% on the day. So all these are doing very well on the day. Bank of America, Charles Schwab. I can't even forget talk. Charles Schwab, right? Try saying that fast 20 times, guys. Impossible. And now Morgan Stanley. They're all doing very well. Now Morgan Stanley's taken the highs out from the middle of June, which is great. And now we're approaching the highs from the middle of April. Look at this, which that's a big spot of resistance, no doubt about it. 90 to 91, 92 bucks. So let's see if we can really start pushing out of there. Are the bulls really, really about it? Are they really about it, or are they going to fail here at 91? That's kind of what I'm looking at. And what do we see here on the 4-hour chart, guys? Inverse head and shoulders. Look at that. This is a textbook one on Morgan Stanley, and this looks like it's about to play out, in my personal opinion. Maybe. Of course, nothing's guaranteed, but I'm going to set my alert at 92, and we'll see if it breaks out of there here on MS Morgan Stanley. Let me pull up here the live news tab and see what is going on here. They did EPS of $1.24, which beat the $1.15 expected. That's great. And they beat on sales, $13.5 billion versus $13.08 billion expected. So double beat there for Morgan Stanley, and their stock is breaking out now almost 6% in the green. Kudos to them. The next one is Lockheed Martin, which is not a financial institution, but they're also up on the day a little bit, about $2, up around 0.5%, and we're also breaking out slowly here on the 4-hour chart. You guys see now we're above the highs from the last couple of weeks. We have a golden cross. We're above the moving averages, and would you consider this an inverse head and shoulders? Maybe. I mean, yeah, I guess it kind of is it not? I mean, look at that. We have the left shoulder, the head right there, the right shoulder. I butchered that, guys, but bear with me. Kind of looks like one, right? And now we're starting to break out. So let me see what Lockheed Martin ended up doing. It looks like they did EPS of, or that's their guidance. They now see 2023 EPS of 27 to 27.20 versus their prior guidance of 26.60 to 26.90. That's good. They upped EPS guidance for full year 2023. That's awesome. You love to see that. But let's see what they did in the last quarter, guys. Where the heck are these numbers for the last quarter? It looks like they did sales of $16.7 billion, which I'm not sure what the estimate was because I can't seem to find the line. And it looks like here they did EPS of $6.63. And let me see, revenue guidance. It looks like they raised their 2023 view on sales to $66.25 billion to around $66.75 billion versus the prior guidance of $65 to $66 billion. Not bad, guys. So they're raising guidance. The stock's breaking out, and we'll see if it starts making a move to the next main target, which I think is anywhere from $490 to $500, maybe even higher, guys. So the last one for this video, ladies and gentlemen, is IBKR Interactive Brokers. Let's run through it very quickly because I don't want this video to be too long. You guys know how that goes, right? We don't like the videos to be too long. And wait a second, they're after the bell. I'm a freaking moron. They're after the bell, guys. So IBKR, we'll cover that one later. I don't know. For some reason, I thought they reported in the pre-market. That's my fault, guys, but I guess we'll just cover it later. So make sure you all subscribe, hit that notification bell, hit that like button while you're at it, and don't forget to get your free money for MooMoo, up to 16 stocks, each up to $2,000. Listen, guys, once you open up your account, link down below, and fund it with at least $100, you get 5 stocks right off the bat, which is awesome, and fund your account with at least $1,000, you get 10 more stocks on top of those 5 stocks, totaling, let me see here, 5 plus 10 is, that's 15 stocks, guys, and fund your account at least $5,000 on top of those 15 stocks. You also get a free share of either Tesla stock or Expedia stock, which I think Expedia stock's $120 per share right now, and Tesla's pushing 300. So yeah, this promo is ridiculous. Use that link down below, and of course, that is an affiliate link. It helps out the channel. I appreciate you guys as always, and with that being said, cheers. I'll catch you all in the next video.